Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Rli Corp annual report. Rli Corp, an insurance holding company, provides a wide range of insurance products to various businesses and individuals. The company's casualty segment offers commercial excess liability, personal umbrella, general liability, transportation, and management liability coverages, among others. This includes professional liability and workers' compensation for office-based professionals, as well as commercial automobile liability and physical damage insurance for truckers and public transportation entities. The property segment provides commercial property insurance, including fire, earthquake, wind, and flood coverages, as well as insurance for office buildings, apartments, condominiums, and industrial structures. The company also offers cargo, hull, protection and indemnity, marine liability, inland marine, homeowners, and dwelling fire insurance products. In addition to these offerings, Rli Corp's surety segment provides commercial surety bonds for medium and large-sized businesses, small bonds for individuals and businesses, and bonds for contractors. The company also offers reinsurance coverages through its various segments. Rli Corp markets its products through a network of branch offices, wholesale and retail brokers, carrier partners, and underwriting and independent agents. With over 50 years of experience in the insurance industry, Rli Corp has established itself as a leading provider of property, casualty, and surety insurance products to businesses and individuals across the country. The company's extensive range of services includes commercial excess liability, personal umbrella, general liability, transportation management liability, coverages professional liability, workers' compensation, commercial automobile liability, and physical damage insurance, inland marine, coverages directors and officers liability insurance, fiduciary liability, and coverages employment practice liability, public and private businesses, risk home business insurance, products security guards, and environmental liability for underground storage tanks, contractors and asbestos environmental remediation, specialists professional liability coverages for errors and omission coverage for small to medium-sized design, technical, computer, and miscellaneous professionals commercial property insurance, fire, earthquake, wind, difference in conditions, earthquake, flood, and collapse coverages, insurance for office buildings, apartments, condominiums, and industrial and mercantile structures, cargo, hull, protection and indemnity, marine liability, inland marine, homeowners, and dwelling fire insurance products, commercial surety bonds for medium and large-sized businesses, small bonds for individuals and businesses, bonds for small to medium-sized contractors, reinsurance coverages. Rli Corp's stock price has experienced a significant decline of over 15.29% in the past year, with a reported change of minus 18.34%. Despite this drop, the company has made several positive announcements, including strong quarterly and year-end results, a regular cash dividend declaration, and an upgrade to its financial strength rating by AM Best. However, these positive events do not seem to have had a significant impact on the stock price. In fact, Rli shares lost 21.6% in value as of January 2, 2026, underperforming the industry's growth. This suggests that the stock price drop may be attributable to broader market conditions or valuation adjustments rather than direct negative news events. The lack of specific negative news events that directly caused a sharp decline in Rli Corp's stock price is notable. The company's positive announcements and strong financial performance suggest that the stock price drop may be more related to external factors, such as market volatility or industry trends, rather than internal issues within the company. Rli Corp maintains a market capitalization of $6 billion, broadly in line with the industry peer group. Rli Corp trades at a higher price-to-earnings ratio of 14 times and a higher price-to-book ratio of 3.15 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 73% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline are multifaceted, influenced by various factors across different segments. On the growth side, net premiums earned, net investment income, and unrealized gains on equity securities have contributed significantly to revenue increases. The purchase of securities and net realized and unrealized gains on level 3 assets have also played a crucial role in driving revenue growth. In contrast, revenue decline drivers are more varied and segment-specific. Decreases in municipal bonds, ABS/CMBS/RMBS investments, and small commercial lines in the casualty segment have led to revenue declines. The property segment has seen a drop in commercial property revenue, while the surety segment's overall revenue has decreased. Segment-wise analysis reveals that the casualty segment has experienced growth in commercial excess and personal umbrella policies, but decline in small commercial and other casualty lines. The property segment has seen growth in marine insurance, but a decline in total revenue and commercial property. The surety segment has declined across all categories. Other drivers of revenue growth or decline include economic activity, technological advancements, legacy technology systems, and cybersecurity incidents. These factors can have a significant impact on the industry's overall performance and an insurer's ability to adapt and innovate. The company's financial performance indicates a positive trend in its ability to generate operating cash flow. According to the provided data, the net cash provided by operating activities has been steadily increasing over the past 3 years. In 2025, the company generated $614,221 in net cash from operating activities, marking a significant increase from the previous year's figure of $560,219. This upward trend is also evident when comparing the current year to 2023, where the company reported $464,257 in net cash provided by operating activities. The consistent growth in operating cash flow suggests that the company is effectively managing its operations and generating sufficient funds to support its business activities. The company's debt level has experienced significant changes over the past year. According to the extracted summaries, the total debt level increased by 2.6% from $3,396,801 in 2024 to $3,533,336 in 2025. However, this increase is relatively small compared to the growth of total liabilities, which rose by 6.3% from $4,106,835 in 2024 to $4,383,290 in 2025. Furthermore, the fixed income debt level saw a more substantial increase of 7.4%, rising from $3,391,159,000 in 2024 to $3,642,362,000 in 2025. In contrast to the changes in debt levels, interest expenses have decreased significantly over the past year. The interest expense on debt has been steadily decreasing, dropping from $6,331,000 in 2024 to $5,358,000 in 2025. This decrease is consistent across multiple sources, with other reports also indicating a reduction in interest expenses from $6 million in 2024 to $5 million in 2025. Overall, while the company's debt levels have increased, the interest expenses associated with that debt have decreased, suggesting a potential improvement in the company's financial health. The financial performance of various segments and regions within the company has been mixed. On a positive note, the property segment saw an increase in underwriting income by $53.5 million. Within the casualty segment, commercial excess and personal umbrella policies experienced a significant growth of 26%, while professional services and small commercial policies also showed modest increases. However, there were several segments that performed poorly. In the casualty segment, commercial transportation, general liability, executive products, other casualty, and commercial all saw declines in performance. The property segment also struggled, with commercial property and marine experiencing decreases of 13% and 9%, respectively. Within the surety segment, contract and commercial policies both declined by 12% and 3%, respectively. The casualty segment was a mixed bag, with some areas performing well while others underperformed. The surety segment also saw significant declines in certain areas. Overall, the company's performance varied across different segments and regions. Management's outlook for the company is optimistic, with a focus on underwriting profitability and operational efficiency. They prioritize investing in technology and data infrastructure to support granular decision-making and drive growth. The casualty segment is expected to continue benefiting from positive rate movement and favorable market conditions, while the personal umbrella portfolio is positioned for continued growth due to secured rate increases. The company also expects continued growth in Hawaii homeowners at a more moderate pace through rate actions and investments in customer experience. Management believes that asset/liability management can minimize liquidity and interest rate risk, with a focus on matching asset duration with liability duration. They also expect stable rates to support continued growth in investment income, but note that a sharper-than-expected decline in yields would limit the pace of that growth. The company has sufficient liquidity to meet its needs over the next 12-24 months, with cash generated by operations, investments, and financing activities providing sufficient sources of liquidity. Management also manages market risk through monitoring fair value, changing investment purchases as needed, and maintaining a balance between assets and liabilities. Overall, management's strategy is focused on driving growth through underwriting profitability, operational efficiency, and strategic investments in technology and people. They are well positioned to navigate the current market conditions and achieve their long-term goals. Rli Corp, a leading insurance company, has demonstrated its commitment to returning value to its shareholders through various means. One key aspect of this commitment is the payment of dividends. As per the provided summary, Rli Corp has indeed paid dividends to its shareholders, marking its 199th consecutive dividend payment declared in February 2026. This consistent payout reflects the company's dedication to rewarding its investors. In addition to paying dividends, Rli Corp has also engaged in share buybacks as a means of returning value to its shareholders. The company has utilized this strategy by purchasing shares through various methods, including employee stock ownership plans, ESOP. In 2025, for instance, the ESOP purchased 163,172 shares at an average price of $75.97, totaling $12 million. This strategic move not only enhances shareholder value, but also demonstrates the company's confidence in its financial performance. That concludes the financial summary for Rli Corp. Feel free to comment below, and I will be happy to answer them when possible.